Okay, Monday stock market technical analysis. We're going to get right into the charts, point out what I'm seeing. Now, I did a live stream on Saturday morning, so if you guys haven't checked that out, we went through lots of different chart ideas. Check those out. I usually try to do those on Saturday morning. I'm not going to do one this Saturday, I believe, because I'm going to Disneyland, so going to have fun down there. But I do try to do those on Saturday, and then yeah, that's really it. If you guys are new, give me a thumbs up and check out my stock market technical analysis course. That's going to teach you the skill set to find your own trades, so that you'll be able to, really, use these charts for to your advantage. Okay, link in the description below. All right, starting out today with triple Qs. All I see here is a bear flag. I don't see anything different. Now again, we rolled down. We had this big leg, kind of this initial leg here down. We're flagging out, and this is projecting that we're going to continue down to, this next area. I think it's probably about here, 316 on this daily chart here for that flag to play out. All right, so that's where I think things are going. Again, I don't see any real reason why we wouldn't just continue lower. We don't really have bullish divergence. So one of my subscribers asked about the divergence on Qualcomm, and I'll point that out here in a second. But this one, you can see we basically just have higher momentum. So I've got it kind of marked out. There it is right there. We've got momentum moving higher and price moving higher. All right, that is what I am anticipating as a counter trend rally. So you have a downtrend, you have a counter trend rally where momentum moves up and price moves up, and then you continue the downtrend. When we're going to, usually when we're going to end this downtrend, we're going to see bullish divergence, and we just don't have that on the triple Qs. So tells me we're going lower. On the SPY here, same thing, looks very similar. Now we got the 200-day to take out, so obviously we're, battling with that a little bit. Bulls are trying to hold that. But I think you're going to probably have an impulsive break of the 200-day and a continuation of this flag pattern. So there's your flag pull. You kind of flag out, and then you can continue down to about 450. Looks like the next level. That's where this flag is projecting that we go. Okay, so that's all I see there. If something changes, we'll keep an eye on it. Small caps, you've got, again, small caps had this big year-long trading range that we broke to the downside. We have not been able to recover that. So until that gets recovered, we've got a breakdown, a flag, this is kind of flagging action. And then we continue lower down to about 170, it looks like, is the the target on this flag. So right down there, that's where I've got that marked out at. I don't see any indication that this is not going to play out. We don't have bullish divergence, we maybe a little bit, but really not much. So I think we're heading lower down to that 170. Gold, okay, gold at this point, we had this resistance line right here at 1832. You can see we hit it once, twice, 3, 4, 5, 2 breaks above it. But now we also have a wedge pattern that is coming off the highs. You can see resistance right there, there, and there. So I'm going to go ahead and get rid of this as a resistance line because it's close enough to that wedge. And we're going to just play this wedge. So we're looking for a breakout to the upside of this wedge. This can go either way. So we just wait for it. But I'm assuming it's going to break out to the upside. Again, down here at the low, right here when we hit this 1682, this plunge down here was a divergent low, big negative divergence, telling us that we're likely going to go higher. And since that negative divergence, we have gone higher. We've gone up about 8%. But I think this is going to play out for a continuation to the upside. Again, looking at the bigger pattern, bull market. All right, we're in an uptrend right here. We keep walking up this trend line. Every time we've hit this trend line, we've held support. We just recently hit it again. We've held that support. So if we break to the upside, it's a continuation of the bull market, and a break to the downside is likely an end of the bull market. Who knows which way it's going to go? We'll have to just see. All right, Ford. So Ford broke down on Friday. It was down almost 10%. And again, I've talked about this trade for a while. Shorted it on the break of the trendline support right there. which kind of chopped around for a little bit because we had support right there on Ford at 1905. So any rally into that level is an objective area to short Ford. Okay, and it should get rejected right there and head down to the next level of support, which is right there, and the 200-day at about 1650. So a very high probable target right now at 1650. If it rallies into that resistance level, that's an opportunity to short or add, in my opinion, and we head down. So this is profitable and continues to work. Qualcomm. So on Qualcomm, someone pointed out the slight bullish divergence right here. It's right about there, and you can see it on the hourly, where we made a, let me go to the hourly just to point that out. Right about there. We made a lower low in price, but the momentum was moving up right there. So you see how the chart, see how we're just moving up in momentum, and yet price dipped down and made a new lower low. That's bullish divergence on the hourly chart. And so they pointed that out, saying, okay, that's probably the end of the rally, but I don't think so, because if I go to the daily, we've got big negative divergence that's been building for quite a while on the daily chart. And yeah, played out for a pullback, but there's this big gap down here to fill. So I don't think that's it. I think this bigger pattern, which is much larger than this little pattern played out for this move here, but I think the bigger, and that's on the hourly chart really, the bigger pattern on the daily and the weekly, I believe, is going to play out for a move all the way down here to the bottom. At least to fill the gap, probably lower, but at a minimum to fill that gap. We haven't even hit the 200-day moving average either. So this negative divergence, is likely going to at least play out for a tag of the 200. I think there's just lower prices. Oh, also, I want to talk about XLK. This is another way to look at tech. So I think it doesn't have Amazon in it, but it is the tech sector. And you can see here on the daily chart, this is your uptrend line. We broke trend. We had negative divergence. So you'll see that just building, big negative divergence. And now you wait for a reverse of trend and a break of the trend line support, which we did. Broke trend right there. There's a sell signal. So you sell down, we ran it for a back test, back below trend. All right. So again, I think we're heading lower. To me, this looks like, just a counter trend rally. And now we're going to run down and do this and probably head down to, possibly all the way down here in this area, about 128.27. All right, so we're going to watch that. If we start to head lower, obviously we have the 200-day moving average sitting there at about 155. Once that goes, we should start to take out the lows. And you'll want to watch the lows as well down here. That'll likely be a little bit of a battleground as well. But you take out those lows and, it'll be obvious to all at that point that we're downtrending. So you'd expect to be a pretty swift move. Once you take out the lows, pretty swift move to the downside. And then likely that'll be, the end of that move. So we'll be looking for areas to cover down, once we get that. Once it's obvious to everyone, you usually want to start looking for areas to cover your short because everybody's piling in. And, that's usually when things reverse the other way. Okay, I've just been scanning around looking for different setups and trade ideas. I don't see a whole lot. It's kind of a continuation day from Friday. So we're going to leave it here, guys. Leave me a thumbs up. I do appreciate that, and I will catch you guys on the next one.